Hey everybody, welcome to this free edition of our Trader Use Group, a weekly roundup for the trading week ending Dec 18, 2020. I'm Preston Brent. Thanks for tuning in. Remember, folks, you don't want to be a rat brain trader. You want to be the red striped zebra, stand out in the crowd. Well, this week's theme is all rainbows and fluffy bunnies. Everything's looking good. Really, too good, actually. If we take a look at kind of where the markets fell in this past week, let's just take a quick review. If we first look at the U.S. markets, you can see nothing but green in the upper left-hand corner. Both the Dow, S&P, NASDAQ, and the Russell up solidly. The Russell and NASDAQ is just in a front foot race right now. I mean, the Russell was underwater by 7% year to date at the beginning of November. And as I was telling our members, TNA is how you want to play this sucker back about 6, 7, 8 weeks ago. And that's what a lot of folks did and doubled, tripled their money. It was a great move in the ETF TNA, which is a small cap 3X bull that pretty much follows the Russell. If we look at the PE ratio, the forward guidance is 26.25. I'll spend more time on 2021 for our members tomorrow evening in our weekly market watch, but there's going to be some great opportunities in 2021 for sure. The dividend yield fell just a little bit, which you would expect with the price moving up 1.63. 10-year treasury inching up to that mythical 1% level. It's at 94.8 basis points right now. The spread between the 10-year treasury and the dividend yield is 68.2 basis points, so still wide enough to put a lot of money into the equity market. And the VIX, as you can see, fell almost 7.5% for the week, from 23.31 down to 21.57. And then, of course, the sector performance for the week. You can see that staples, in that continued rotation that we're seeing, and it's lasting this time, unlike Q4 of 2019. It is just really coming on strong. Staples had almost 4% for the week. Energy, just the mirror image opposite, down 4.1%. Sector performance for the year, technology still leading the way, 41%. Energy bringing up the rear at almost 31%. Now, if we look at the international markets and just kind of see how things are faring out, kind of a mixed bag. I mean, clearly over in the Asian markets, you can see the Nikkei and China both up for the week. Year to date, just to me, is amazing. The Nikkei up 13.13%. China doing fairly strong. China will probably be the only country this year in 2020 that's going to have a positive GDP for the year, which is ironic since the pandemic kind of started in China. If we look at the weekly performance, the FTSE and the CAC 40 both in the red. The FTSE, because they got the big Brexit vote, they've got another line in the sand. I'll talk about that in a minute. Year to date, down 13.43, so they're still in correction territory. The DAX moved back into the green this week, just above flat line, 2.88%. Hang Seng, Hong Kong, obviously, as you would expect, not doing that well because, China came in and kind of just took over everything for the week. Okay. Now, if we come in and let's just take a look at, just break this down just a little bit more before we go take a look at the charts. Let's look at the sound bites for the week. If we look at the index performance, as I said, the U.S., everything is in the green. We reached record highs this past week. What I find really interesting is we're seeing record highs in price action, but we're also seeing record highs in the number of COVID cases and deaths. But keep in mind, as I always tell our members, the markets are pricing out in time, anywhere from 90 days, 120 days. So they're pricing where the market's going to go. So it's no surprise that we're getting record COVID cases and deaths, yet we're also getting record highs in the indexes. A lot of rat brain traders and beginning traders, newbies, they don't understand it. They're trying to trade the headline news with the business journal of the day, the National Enquirer, or the USA Today color by numbers business section. But be that as it may, 2021 should be a really interesting year. Okay. Trading volumes this past week were a little bit muted until we come into the end of the week. Remember, it was quadruple witching, which basically, depending on how you count it, some people call it triple witching, but we had everything expiring, the options, the weekly, the monthlies, the quarterlies, the index futures, everything expiring on Friday, rolling out. So you tend to get a little bit of movement there. Also, we had some really interesting moves in Tesla because they were made part of the S&P 500 as well. So we're seeing some of that happen. The other thing is positive sentiment out of the markets on the vaccine release, and then the Moderna getting authorization, emergency authorization. So Monday, that should be real interesting. The Feds also came out after markets closed on Friday and announced that they're going to allow banks to do dividends, increase dividends, stock buybacks, that kind of thing. So if you own any bank shares, just check it out because it probably gapped up a pretty good bit after markets closed. So we're going to see that. And the other thing is the politicians issued emergency stopgap to keep the government funded, but only through Sunday. And the reason why is they want to get that combined with the stimulus bill. So there is a huge impetus to get a stimulus bill done on and voted by market open on Monday. So I think we could get a pretty good Monday if all of this stuff kind of comes through. And if we look at the economic data, well, again, like I said, record highs in the indexes. We're also getting record highs in COVID cases and deaths. And we're getting some economic activity that's slowing down. I mean, we saw retail sales contract about 1.1% in November. And that was the worst showing actually in this pullback of 1.1% since April of this year. We're also seeing weekly jobless claims, which came out this past Thursday. It reached 885,000, well above expectations and the highest that we've seen since early September. Remember in early September, what happened the rest of the month of September? We had a pullback of almost 10%. We're also seeing continuing claims fall back to a new pandemic low. Okay. So we are seeing economic data, and most of this is due to these idiot governors shutting down a lot of these states. Most of them dim run, just really stupid stuff. They're not even following the science, but they're just, what can I say? They're idiots. But they're shutting down these states. And obviously, when you shut things down, it forces a slowdown in the economic activity. So we're going to see that bubble up through the markets. Momentum can carry us higher longer than you think with the fiscal stimulus package and a few other things that I think are going to be coming out. But outside of that, it's going to work its way through. We should have a nice little pullback sometime in Q1 before we finish 2021 really strongly. And members, I'll go through some stocks and some other things that we can watch here. Now, also, if we look at the Treasury, okay, long-term Treasury yields increased a little bit most of the week as, again, the fiscal relief hopes and optimism on this vaccine distribution are kind of outweighing what I just talked about, the disappointing economic data, right? And not only that, but money helps, and mo money helps even mo. The December 15, 16 FOMC, that's the Federal Open Market Committee, that would be the Feds, and Jerome Power Ranger Boom Boom Powell doing their things as expected, are very dovish. All right. In fact, the FOMC said that it's going to continue buying treasuries and agency mortgage-backed securities. That would be why the mortgage rates are at all-time lows. I think since they've been tracking at 2.71% for a 30-year mortgage. Just really crazy, right? But they're buying 80 billion every month of on the front end of the treasury curve, the shorter end duration, and then they're leaving the back end alone right now. I suspect they're probably going to have to shift some of that shortly when inflation starts to get hold, but we'll see how that works its way out. And they're buying 40 billion a month in mortgage securities. I mean, just really crazy. So 120 billion a month, and they said they're going to keep this at its current pace until substantial, underline the word substantial, further progress has been made towards their maximum employment and price stability. Remember, they used to base it a few months ago on inflationary data. Now they changed that to employment, maximum employment. How do you define that? How do you define maximum? Well, they're pretty coy in how they do that, but let's just say that they remain very dovish. So 2021 could be one of these Goldilocks years where you've got very low interest rates. You've got consumers which have saved a record 1.5 trillion since the pandemic hit. So they're going to be flush with cash. You're going to want to spend more once the vaccines go out and you get by the summer of next year, get a pretty good bit of the population. The rule here, from what I'm seeing from the Fed or from the medical community, is 70 to 75% of everybody being inoculated, which I don't think they're going to hit. They'll be lucky if they get 50%. But if they get 70%, then that means you've got a herd mentality, and they'll really dramatically reduce the number of COVID cases and deaths. I think that's going to go down as a natural consequence anyway. And then finally, the comedy over in the UK and the EU continues with the Brexit, right? Our favorite prime minister in the UK, Boris Bulldog Johnson, said that we're in a critical phase. And he's been saying that now for about 60 days. And he's saying a no deal scenario is very likely. Again, he's been saying that for 60 days, unless the EU changes its position substantially. Again, he's been saying that for 60 days. They've drawn a line in the sand and moved it probably 4 times. Now they got a new line in the sand, and the EU is saying it's going to be very challenging to bridge this big difference that they have with the UK on just a couple of issues like fishing rights and a few others. But they've got a line in the sand again this Sunday. They want to try and get everything done so that the UK Parliament can vote on it, and they are on standby for emergency sitting before Christmas to consider approval of the deal, assuming they get this deal done this Sunday. If they do get it done, then we're going to have a trifecta. We're going to have the UK and euro coming up on that. You're going to see the British pound just go bloody murder higher on Monday. You're going to see the stimulus package get approved on Sunday if our politicians can get their act together. You're going to see this the rendering of the Feds allowing financial institutions to buy back stock. So we could have a really strong beginning of the week. I think the momentum will carry us through Christmas, probably through the end of the year. But these are some of the things, binary things that can move the markets. Members, we'll go into a little bit more detail on a couple of things in January that could just upset the apple cart. But that's kind of what we're looking at right now, everybody. What I want to do is let me just freeze the screen here for a second. Let me just take you over to the charts and just kind of show you what we're looking at here. And then I'll let you guys go for the weekend and have a really good time, right? Members, again, if you're not a member, I would highly encourage you to come in. We're seeing a lot of activity in the option market. 2021 is going to be like just an unbelievable opportunity to make a lot of money. And that's kind of what we want to see. So let me just get this screen switched over for you guys. Let's bring it over here like this. And we're going to start out with the S&P 500 E-mini futures. We'll start out with that first, and then we'll go from there. All right, I'll wait for it to paint on the screen for you. As soon as it gets up, we'll get it cranked up. All right, so it looks like it's there now. So what I'm looking at here, and you can see these colored bars, is I knew we were coming up this level. In fact, I've been talking since the drawdown in September of almost 10% that we're going to run up to probably 3750, 3800 before the end of the year. And you can see here we're now we hit all-time highs on Friday in the E-minis, 3723. We hit it actually before the markets opened. It came down, and then that's kind of where we're sitting right now. You can see a little bit of a divergence in here, a little bit of a dip, but I think if we get enough momentum with the stimulus and a few other things just lining up, then I think we're going to run up, take out this colored bar, run up to 3,800 pretty quickly. All right, and that can happen in the last couple of weeks of the year. All right, remember, we still have a few weeks to go. Trading volume is going to be light, so it's kind of setting itself up. Either way, I would give it at least a 60% probability that's where we're going before the end of the year. Now, things can upset it, of course, but that's kind of what I'm looking at here. And if we look at NASDAQ 100 futures, you can see here we also made all-time highs on the 100 largest companies in NASDAQ. Okay, and if we break this down and look at the FANG index, you'll see the FANG index. It's running flat. I mean, you can see the last all-time high we made here in my FANG index. I've customized this. You can see it's comprised of Microsoft, Facebook, Apple, Netflix, Google, and Amazon, and I got a multiplication factor in here to kind of make it an equal weighting kind of index. You can see here we've been running flat. So clearly money's been running out of the hard chargers, into what I consider cyclicals and value. And I've shown this every week, I guess, for the past 3 or 4 weeks. For members, I've been giving you guys a heads up for quite some time. But if we look at this and we look at growth versus value, you can see here in this chart, it's just moving lower here, although we had moved up just a little bit. And in the numerator is growth, the denominator is value. Okay. But if we look at the equal weight SPY versus the SPY itself, look at this. It's just straight up. that means you take out the weighting of the Facebook and the Amazon and the Google and the Microsoft and the Apple. You take their weighting out and just make everybody equally weighted, and look at what happens. So this shows there is a rotation going on from some of those FANG and some of those hard chargers into other stocks. That is the value stocks. Really, they've been underwater for 10 years, all over a decade, since we came out of the 08, 09 fiscal crisis that we had, financial crisis. And now we're seeing a lot of these guys play catch up, and there's no better place to see it than in the Russell, right? And if we come over here and look at the Russell futures, right here. I mean, look at this, guys. And this down here, the Russell futures, this is the dividing line between being in the red and being in the green for the year 2019 close. You can see 1674 for the futures. We were 7% down at the end of October, November the 2nd, and then it has just been a straight shot up, right? And then the Russell is up over 15% for the year. If you weren't in the Russell for this 6-week run, you missed the entire year, okay? And the Russell has been trailing. The last all-time high with the Russell outside of before it started making this move was in September 2018. And it caught it all up. And if you look at the MACD, it's running flat, which indicates this is a consolidation period for the Russell. Now, what I had our members jump into earlier, and I was talking about it for quite some time. I know some of our members I've gotten emails from have doubled or tripled their money depending on how aggressive they played it. And just kind of how they did it was in TNA. This is a small cap 3x bull, and you could see here it went early from 31.42 all the way up to 65.77. So just a great move here, and you can see the MACD. There is no divergence in that at all. Excuse me. So we're getting a lot of movement here, guys, and a lot of different things, and you don't see this kind of rotation at the end of a bull market. Now, I know I feel pretty confident we're going to get a correction in Q1, maybe the beginning by Q2. It can run a little bit longer than you think before you get the correction, but 10 to 15% pullback, we're going to get a scare the children moment. And then 2021, you definitely want to load up with cash, because that's kind of where we're going to see, and then it's just going to go like crazy. But if we look at the volatility, let me get a drink here. Hang on one second. And let me just do one thing right here. Bear with me 1 minute. Okay, I'm back with you guys again. I swallowed my water the wrong way. I think the volatility is going to come back down below 20 eventually, but it's going to stay up. Damn. Probably over 20 until we get through with this election. It's a binary event that's going to happen in Georgia, these runoffs. But outside of that, I think we're going to get another run up when we get that correction, and folks said it's going to be a time to load up the boat. Members, we'll go through more detail on it. If we look at the treasuries, it's going to continue lower, guys. Here we go. And then if we look at the currency market, and my favorite trade, one of my low-hanging fruit trades, and I just didn't even adjust it, but look at it. We had a high of 123. Back over here, I was saying you got to get long the euro. You know, I don't care how ugly Europe looks right now. You got to get long the euro. And being long the euro, we're going to see the dollar tank. And as I told you guys in our low-hanging fruit trade, here's the dollar, and look at it. It's just continuing to go down. I will say one of the most crowded trades right now is being short the dollar, being long Bitcoin. Those two things there are really heavily favored trades by everybody. And from a contrarian standpoint, you got to be careful when everybody gets on one trade. That means generally you're going to get a reversal. But in any rally that we see in the dollar or a pullback that we see in the euro, it's time to get long the euro, short the dollar again. Right? It's just going to be one of those kind of trades. And if we look at the British pound, here we are up in my resistance point. I've said the British pound is a great trade longer term. All right, it's going to be back up in the 140s, probably low 150s as we get through 2021, 2022. You just got to take advantage of some of this low-hanging fruit trade. It's just what it is, right? And for our members, I've been talking about it for a time now. And if we come down here and we look at metals, let's look at gold for a minute. You can see gold has now broken above the 50 EMA, okay? And it's held it for 2 bars. I think a little bit of a pullback right here, but I do believe at the end of 2021, gold's going to be over 2,000, right? I think that probably, in fact, it's probably going to be up over there before halfway through the year. If we have a strong finish to 2021 and we see some inflation come in, let's just watch gold. It's going to be a good play. Now, a way to play gold in the precious metals, as I tell our members all the time, it's better to play silver from a return on capital standpoint. Look at silver. It hit the 22. Now it's up at 25. It's $5,000 a point in the futures, guy, or you can do SLV, the ETF, and track it. We've already taken out this prior pivot high. It pulled back. It's going to sit here for a bit, but it's going to consolidate, and I think it's going to move up. I've got a longer term play with silver up here around 34, believe it or not. And it's going to move up there. We got this long, almost like a cup and handle kind of setup here. It's a consolidation period. I think it's going to move higher, guys. And some great ways to play gold is, like Newmont Mining right here. In fact, Buffett took a big position in Newmont Mining. I think this sucker is going to go higher. If I were to put a regression line on it and just kind of plot the high here and the low right here like this, if it takes this out, it's going to be going higher and it'll move quick. Okay. So that's another way to play it. Or you can do GOLD. I don't even think I have that on I must have deleted that accidentally. But GOLD, same thing here. It's Barrick Gold. This thing is down low. It's cheap. It's $23. I think it's going to be back up here over, it'll be a 30% bump up on this thing right here. And you can see here we're getting a little bit of a divergence in the MACD. So I think this is also a good one long term. If we look at oil, you can see oil is just huge rally off the support point here. I had said that oil could run up to about 50 and then it's going to kind of run into some issues. But keep in mind, oil goes, so goes the global economy. Global economy is good, oil is good. Now, our trade of choice in the energy, or not the energy market, but in the precious metals market, or metals market rather, was copper. And here's copper right here. This was a huge win for us. I was getting everybody in copper early here. Anytime you got global growth story, copper is that was a place to be. And we traded it via Freeport-McMoRan. Okay, that was the trade to play there. Let me just find Freeport-McMoRan on here, just kind of show you right here. I talk about it every week. I know a number of you have sent me emails and have jumped into this thing. It's really good. Now, it's going to run sideways, maybe even pull back a little bit, but I'm telling you, 2021, the upside of Freeport-McMoRan, I see it up around 39 or 40. All right, it's sitting at 24 now, so that's still on a return on capital basis a really good potential trade. It will pull back when we get that correction sometime in Q1, early Q2. And this will be the time to just load the boat on this thing again, right? And for those that have been in it since here, our cost basis is in the low sixes, 612, 615 area, and it's already sitting, closed the week at 24.63. So we've got great profits in this thing. Let's just keep riding it and just see how long it wants to give it to us, right? So going back to the energy market, natural gas, any rally here, it just got back up over the 50 EMA. Once it goes back below the 50 EMA again, I think a bear call spread makes a lot of sense in nat gas. Now, there's a lot of other, I couldn't talk, a lot of other opportunities here in the market, stocks, and a few things for 2021. Members will spend more time on that in our session tomorrow evening. Also, we have a new indicator and some new option strategies around that I wanted to share with our members. If you're not a member, I highly encourage you to come in. 2021 is going to be a year you do not want to miss. Okay. Have a great weekend, everybody. And members, I'll see you tomorrow evening. Ciao, folks.